Right, start from a daily chart, going into Friday, May 29th. We can see that yesterday's low of day, Thursday, coming right at 50%. This was a daily discount array of interest coming inside the day. You can see the market opens, trades lower into it, and eventually closes at the highs. Market's still not interested in revisiting the NWAG. Now you can see also the market creating a low of day at the bullish breaker on the daily chart. I thought coming inside of the week, this was a level of high confluence, so a lot of discount arrays located in this range, that bullish order block, the bullish breaker, the new week opening gap. If you look on the 4 hour, right, so into tomorrow, in my opinion, price shouldn't revisit the range of the previous day's low and should keep expanding higher, or at worst case consolidate. In terms of discount arrays in the range, there is the previous day's rejection block, but if price is really bullish, in my opinion, it won't even need to come to these levels. We'll look at that on the 4 hour though. In terms of premium levels, there's a new weekly high. There's so far a divergence with the S&P 500, but I don't think that it's relevant in terms of a reversal, because the weekly profile is bullish, right? It's an open low high close profile. If you look on the 4 hour, we can see today's low of day coming back inside that 4 hour fair value gap of interest, which I talked about coming inside of the week. You can also see the market holding the range of the dealing range low. Right, this was a level talked about yesterday. As Thursday opened inside of a dealing range, the order block located in discount was still valid. You can see that the market comes back to it and eventually trades away from it, leaving a fair value gap. Okay, so this is an interesting level, which we'll look at from the perspective of a 3-day look back. We can first look at the range of a 3-day look back. So you can see that the market overall traded the most amount of contracts inside of this weekly range, around 50% of the range, from Monday's low to where we're going to be at the open on Friday. Okay, so in terms of a weekly profile, what are we likely looking at? I think there's two options left at this point. The first option, which is the option that I believe, which is the profile that I believe is happening, is the range to expansion profile. Market creating a lot of divergences in discount, such as with the low of Tuesday, such as with the new week opening gap, the S&P 500 revisiting it twice, while Nasdaq hasn't even revisited at all. Right, so option number one in terms of a weekly profile, the range to expansion. Right, this is a profile that would favor, in this case here, an expansion on Friday. I mean, I wouldn't consider this a swing to Z profile, because first of all, there isn't really a swing right at the low of the week. The price simply gapped higher and then spent a lot of time trying to trade under the weekly open. Usually to me, a swing to Z looks like some kind of initial swing, right, and then an expansion somewhere in the middle, followed by consolidation. Well, in my opinion, this is not really the case here. The fact that on Thursday the market comes back near the new week opening gap, I don't consider this a swing to Z. So range to expansion profile, right, with Thursday being first stage of expansion. I think that Friday could become also another phase of expansion. If not, we could potentially be looking at some kind of seek and destroy profile if today were to reject at the highs. The market trading higher, lower, unable to create a trend from a higher time frame perspective. But this would need to see Friday being a bearish profile, right? And overall the whole week simply consolidating. So I believe that those are the two profiles in play. Obviously, if Friday will be an open low high close, we're looking at a range to expansion. If Friday will be an open high low close, then we're looking at a weekly consolidation profile and not expansion. If we look at what the previous day's range left behind, okay, first of all, what I want to talk about on the 3-day look back. Now we can see that we have a dealing range low being the previous day's low. Right, so if ever the market were to revisit the range of the bullish order block created in Asia from yesterday, very likely this range will hold. You can see that there's many order blocks cutting through the quadrants of the main order block. Okay, so in my opinion, this is even a balanced range, right? I don't believe personally that price should even come back to these levels. Okay, so this is in terms of the 3-day look back. We have a dealing range low, and if we look at the previous day's profile, I mean, this is typical of a trending environment, right? This is a classic open, low, high, close. Looking at the profile, I mean, I wouldn't say that there's an order block of interest located at these levels. This is simply an accumulation phase. But what I am interested in is what the market left behind near the closure. Right? Since yesterday was an expansion profile, classic buy, right? London low of day. You know, this type of profile usually tends to leave some kind of fair value gap behind. So if we grade the range of the previous day, I can see that above 50% of the previous day's range, we can find 1, 2 order blocks. We can fair value gaps. We can also find an inverse hourly fair value gap. Now, as of which one to choose, you know, could you use this one? Could you use this one? If you don't want to overcomplicate it, you can simply use the quadrants of the 4-hour fair value gap. And I think that this level will help you gauge order flow. If the profile of Friday will be an open low high close, extremely likely the low of day will be formed inside of this fair value gap, right? Something like expansion, consolidation, Friday opens, can keep on consolidates, creates a low, right, and then expands from those levels. So 4-hour inefficiency at these levels, okay, located above 50% of the previous range, very important. Okay, this level is also important for a scenario such as this one, right? In that case, the quadrants of the 4-hour inefficiency will be used as an inversion. And I think that covers it overall. I was thinking in terms of standard deviations, but in my opinion, we don't really have anything too obvious, or you know, at least too realistic. I don't think it's realistic to use, I'd say, these standard deviations going into Friday. Okay, and so level of interest for tomorrow, 4-hour fair value gap. Again, this is located in premium of the previous day, so if the market will be bullish, will likely hold this level and keep on expanding from it. Okay, so this can provide, say, a trading opportunity in New York in case Asia, London trades inside these levels and expands out of it, right, leaving fair value gaps. This can provide an opportunity for New York to retrace inside of. This is one scenario possible. A second scenario possible can be, say, Asia opens, keeps on consolidating. Asia trades higher, London trades higher but ends up failing. And then New York opens, comes back in the range and finds a reversal, right? So here we'd be looking at a bullish New York reversal. This, the first one here, this is an example of a classic buy. So these are open, low, high, close profiles. Expansion profiles, right? One of them being reversal, but a reversal is an expansion. In terms of consolidation profile, look, it is possible that There can be some kind of swing to Z at these levels, right? Candle early on trades at the lows and then into New York, which opens in premium and consolidates from those levels. To be able to differentiate, right, if New York is going to be expansion or consolidation in this scenario, we have to see what the other sessions left behind. Right? If the previous sessions did not leave any obvious fair value gap behind, then likely this can lead to some kind of New York consolidation. Another scenario possible, okay, is this one, some kind of swing to Z, seek and destroy-ish consolidation profile. This is a profile that's pretty common when the market expands like this. Now, because of the weekly profile scenario, I'm not sure that, not that it's not realistic, but I'm not sure that this is a high probable profile that can form. But everything is possible, right? You need to be open to any scenario. Now, how were you to identify this level? This profile. Say the market either trades higher first or lower, right? But fails to expand highs or lows, right? And simply comes back, revisits the fair value gap, trades higher, but again fails to take out the highs, right? And doesn't build a trending range, right? Stays tight inside of the range. This can be a possibility. So we looked at bullish profiles, we looked at consolidation profiles. Everything's always going to be in relation to the fair value gap. Look, if price is really bullish and gaps up here at the open in a minute, everything's possible, right? If it opens and starts creating fair value gaps right from the open and leaves the 4-hour fair value gap as a breakaway, that's also possible, right? In that case, you want to see what fair value gaps are left behind coming inside New York, and you can use those to either trade a continuation from or, right, a reversal from. Okay, so bullish consolidation, and in terms of a bearish profile, open, high, low, close. We currently have a divergence between the high of Wednesday and the high of Thursday. Okay, say the market opens and starts trading lower, inversing the fair value gap of interest. Alright, in that case, this can provide an opportunity to trade short if New York were to pull back inside the inverse fair value gap. But again, I don't think the probabilities for this profile to form are high, but we're simply looking at options, right? We're keeping all our options open. If an open, high, low, close profile were to form, okay, either say this way, right, from the open trades lower, inverse the gap, or trades higher and then London ends up rejecting, right, and New York does something like this. Well, what I would recommend is to not look to target the new week opening gap or the previous day's low. Why? Because this is currently a new dealing range low at these levels. The previous day's low is a dealing range low, and in fact there's a very strong order block. Why is this a very strong order block? Right, we looked at this on the 3-day look back. Why is this a strong order block? Because it's accompanied by divergences, right? So this proves that this distribution lower was simply a shakeout. Right, from there, market breaks above and displaces above this level. Okay, so four-hour inefficiency level of interest for the day. If the market were to break this inefficiency, then I would suggest to put up the quadrants of the dealing range low on the hourly chart, so the order block that created the previous day's low. And so yeah, so just pay attention to the fair value gap, see how the sessions trade around it. Do they come inside of it and displace out of it? Do they come inside of it but fail to displace out of it, right, and simply build a tight range around it? Or does it fail to hold it, right, and starts creating fair value gaps through it? or bearish order blocks, right? Say something like this. But no matter the daily profile, I believe that this 4-hour fair value gap here will give you all the information that you need to trade the daily profile. All right, so I think we covered everything on the daily. We looked at the 4-hour. There was a fair value gap, the dealing range low. The market is holding all these levels. Okay, so this is giving you a bias to keep trading long, right? You don't want to be looking for shorts inside of this market, especially not when Thursday leaves such a bullish closure, right? Expands towards the end of the candle. Okay, so this favors, in my opinion, Friday continuation higher. And here on the hourly chart, we looked at same level, the 4-hour fair value gap, and potential open low high close profiles, open high low close profiles, or consolidation profiles forming around the fair value gap. Okay, again, all depending on how the sessions treat the fair value gap and what they do once they trade into it. Okay, so keep this fair value gap on your chart. Remember, if the market's really bullish, okay, it can simply keep trading higher. It doesn't need to fill it. But because of the fact that currently the market has opened without a wick, I believe that it will revisit these levels before trading higher. But obviously this is only 5 minutes inside the open, right? For all that matters, in an hour this candle could be something like this, and we have a large displacement above the, not the previous high, but the current weekly high, right? And then in that case, that can be a scenario where price trends all day. Okay, so keep this 4-hour fair value gap, and let's see what tomorrow gives.